Rob Berger here, author of Retire Before Mom and Dad. In this video, we're going to cover chapter 24 of the book, and that's where we looked at how to evaluate mutual funds. And at first, for those just getting started with investing, it can seem totally overwhelming. I hope through the book you've realized that, yeah, there's some language, some jargon that you need to know, and some basic concepts. But once you know it, this stuff really is not difficult. And so what I want to do in this video is evaluate two mutual funds. And so the idea here is maybe you've got a 401k at work and you see 10 or 20 different options, and you're not sure what each fund actually is or does or invests in. And maybe you're trying to build the 3-fund portfolio. Maybe you're interested in a target date retirement fund. Maybe you're interested in some other type of portfolio. Whatever it is, you need to at least know what each mutual fund invests in. Is it an index fund or not, for example? Is it investing in US companies or foreign companies, or maybe both? Large companies, small companies, how much does the fund cost? All of these sorts of questions. It's really easy to get this information. And so I'm going to look at two different Fidelity funds. And the first one, the ticker as you see on the screen here, I've Googled it, FZIPX. It's amazing what the information you can get just from entering a mutual fund's ticker symbol into Google. And so it pulls it right up, and we see this is the Fidelity Zero Extended Market Index Fund. Now we can guess pretty much that it's an index fund. It says right there, but what's the zero mean? And extended market, what does that mean? Is that US or foreign or both? Does it mean it's a larger fund that covers more of the market? What does extended market really mean? So we need to figure that out. But just from this snapshot in Google, we can see what its annual or year to date, that's what YTD stands for, year to date return, just over 19%. About $418 million is invested in this fund. Its expense ratio is 0%. That's interesting, right? It doesn't have an expense ratio. That's what the zero means, by the way. This was something that Fidelity came out with recently. They're offering a handful of index funds where they don't charge you any expenses for managing the fund. You will still pay for the transaction costs within the fund that come out of your returns, but it's an index fund, so those should be minimal. And it doesn't show a yield, which TTM means trailing 12 months. I think that's because the fund is still new. Yield in the case of a stock fund would be through dividends, right? And here I'm guessing the fund is just too new for Google to reflect a yield. So we get some basic information just from Google. And of course, we can change from 1 month to 6 months to a year to date and so on. If we go out too far, we can see 5 years, but it really doesn't show us that. It only goes back into late 2018, I think, when the fund was launched. So we get that just from Google. Now, I want to look at two other sources, though. The first is Fidelity itself, and then we're going to look at Morningstar. So let's go to Fidelity. And if you watched the previous video on chapter 22, you saw a screen very similar to this. It's a lot of information. Frankly, this is everything you need to know, and we can pick out the pieces of information important to us very quickly. I always start with Fidelity in this screen here, the details. Mid-cap blend. Now, if you've read the book, Retire Before Mom and Dad, you know what that means. Mid-cap, that just means it's a medium-sized company. Now, these are public companies, so a medium-sized company could have a market cap of several $billion. So you don't think of mid-cap as the mom and pop store around the corner. These are still large corporations. They're just not the Apples and Microsofts of the world. We can actually look at what companies this fund invests in. We'll come to that in just a minute, but we know mid-cap, it's a cap stands for capitalization. That's the value of all outstanding shares and of a company, and it's sort of in the middle. So it's not a small cap, it's not a large cap, it's a medium-sized company. We can see the fund inception. Sure enough, it started last year. It's less than a year old, and again, that's probably why the Google is not showing the yield. We can see the expense ratio, 0%. Boy, that's hard to beat. And we can see the minimum investment. There is none. You can invest whatever you want. So very quickly, we can see pretty much all we need. We could honestly stop there. We know that it's a mid-cap. So if we want a mid-cap index fund in our portfolio, we've got one here. We know it's an index fund, so it's going to follow a mid-cap index. We know the expense ratio couldn't be any better. It's 0. And we know the minimum investment. Basically, there is none. You can invest whatever you'd like. I do want to show you, though, some other things that may be of interest to you, if not now, down the road. Let's start with turnover rate. The idea of turnover rate is how much of the investments in this fund get bought and sold every year. And here it's 37%. Now, in a retirement account, that's really not a big deal, although it can, the higher the turnover rate, the higher the transaction costs, right? Because the mutual fund company has to pay transaction fees for all of the buying and selling that it's doing. So it's not irrelevant. But where it really comes into play is when you're investing in a taxable account. Because if a fund is buying and selling a lot of its underlying stocks in its portfolio, that can trigger a capital gains tax for a mutual fund owner. So that's something to be very careful of. 37% is not outrageous. You'll see funds that trade over 100% of the value of their portfolio every year. So my hunch is that this fund is probably fairly tax efficient. That being said, you certainly can find funds that are less than 37% turnover rate, but the real key here is just so you understand what that is. You can see the growth of $10,000. And again, it's a hypothetical, and there's not a lot of track record here because it was started last year. For older funds, obviously, you'll see a longer performance history. And that's, again, pretty much all you need to know. I wish I could try to pretend this was more complicated, but it's not. Now, I would like to show you some of the holdings so you can get a sense of it. Over here, you can see the fund's top 10 holdings, and many of these companies you've probably never heard of. And that's not uncommon when it comes to mid-cap and small-cap companies, although I'm guessing many of you have heard of Snap. So that's one of the companies in this mutual fund. We could go to composition here, and it would break it out by industry or sector, if you will. Again, you'll see the top 10 holdings here. Here, this tells us that the vast majority of the fund is U.S. or domestic equities, which is what we would expect. We can see what's called a style box, and it's a mid-cap blend. Again, those terms now should be very understandable to you. Mid-cap, we talked about it, medium-sized company. And the blend means it's a combination of value and growth companies. Remember, value are companies that by some measures seem underpriced. And growth companies are companies, they may not be underpriced, but they're growing their revenue and their profit very quickly. And you'll learn that over time, there are some periods where growth companies tend to outperform value companies. We're in that kind of environment right now. But in other cases, value companies outperform growth companies. And for index fund investors, you tend to say, I'm not going to pick value versus growth. I'm just going to go with the blend fund, and over time, sometimes value will do better, sometimes growth will do better, and I'll have them both. I'll just have a blend all the time, and so I'll just sort of mimic the market, and that's what this fund does. Now, you could dive deeper. You could go into fees and distributions. We've talked about the fees already. It's pretty simple, 0, and there haven't been distributions that I can see. Oh, no, here we go, dividend history. So there have been some dividends. You would expect it on a quarterly basis, maybe, although this looks like maybe just once a year. With mutual funds, you often get higher payouts in December. And you can see they had 2 last December of very small amounts. So you can see the distribution history. Obviously, for a fund that's been around longer, you'll see a longer history. Now, you can go to the prospectus, which is a document filed with the SEC that gives you all of the nitty-gritty of the fund, but you don't need to. Really, what we've just walked through is about all you need. Now, we can look at this in Morningstar, which I want to do. We're looking at the same fund. It's basically going to give you the same information, right? They also don't show a trailing 12-month yield. There's zero expenses. We know that. Assets under management, about 418 million. It's a mid-cap blend, right? It's all of the same information, just in a different format. Now, you may say, well, Rob, since we looked at this in Fidelity, why are you showing us in Morningstar? Well, part of the answer is you may not have access to Fidelity. Perhaps your 401k is at a different mutual fund. Well, I can't show you every single mutual fund out there. That would take forever. So I show you Morningstar because you can always go to Morningstar, type in the ticker right here, and you'll get information just like this, very similar to what we looked at. We can go to Portfolio, and it shows you basically the same information. And we can even scroll down, and you'll see the top holdings, including Snap, just what we saw before. So it's the same kind of information about the fund. It's just, in this case, it's on Morningstar. You can look at its performance history. Again, there's not a ton of history here. It's a fairly new fund, but you can see that. And again, within 60 seconds, maybe 2 minutes tops, whether it's at Fidelity or your mutual fund company or at Morningstar, you can get all the information you need about a mutual fund. That simple. Now, let's look at one more. This is the Fidelity Zero International Index Fund. So we see the same box from Google. I just typed in the ticker here, and we see the year-to-date return. It's got about $1 billion in assets. Again, expense ratio is 0, and we can look at it in both at Fidelity and at Morningstar. Here, again, we see just about everything we want to see. Interesting. Turnover rate's just 9%. That's very good. Again, won't matter so much in a retirement account, but it's always good to know what it is. Expense ratio, of course, is 0. We can look at the composition, and we can see the companies that it owns, at least the top 10. We can also see that those 10 holdings represent 9% of the overall portfolio. One thing that we can see, and I know in Morningstar they usually show it, if we go to portfolio and we go down to these top 10 holdings again, it shows you the total equity holdings. So this fund invests in over 2,100 different companies. Extremely diversified fund, as is the case with most large index funds. It's not uncommon to see certainly over 1,000. One notable exception, of course, would be the S&P, a fund that mirrors the S&P 500 index fund. Now, you might think that such a fund would hold ownership in 500 companies. That turns out not to be true. Sometimes it's 503 or 504, but approximately 500 stock holdings, still incredibly diversified. But for some of these international funds and total market funds, it's not uncommon to see, as in this case, over 2,000 stock holdings. So again, very diverse. And going back to the Fidelity website, you can see again, it's a blend, it's a large cap. We know what that means. You can again look at its sector weightings. It has 20% in financials, 12% in industrials, and so on. And really all of the information you need to make a sound investing decision to create your 3-fund portfolio or whatever type of portfolio you want to create. And you can do the same thing in Morningstar. So if you don't have Fidelity, you have some other mutual fund company, you get the same information in Morningstar. And for most mutual fund companies, I've used Fidelity as an example, but most mutual fund companies are going to give you information in a similar way about the mutual fund. So again, you want to know what it invests in. That was easy to figure out. Is it mid cap, small cap, large cap? Is it a blend? Is it an index fund? Does it invest in US companies or foreign companies? You always want to know the expense ratio. That's important. And the information, very, very easy to ascertain. So that's it, very quick. If you have any questions, leave them in the comments below the video and I will respond and Appreciate you listening to these videos. Please subscribe to the channel. Although this is the last of the videos I planned specifically for the book, I'm going to be continuing to upload videos on everything related to building wealth, retirement, investing, managing your money. So subscribe to the channel and you'll get a notification when those videos are posted.